For a whole host of reasons, we have seen that the financial sector has led higher interest rate, lower interest rates, more problems to provide for bad loans. For a whole host of reasons, we have seen a large growth in NBFCs, non-bank entities, and more importantly, the mutual fund sector. And let's put the mutual fund sector's growth in perspective. It is now 25 lakh crores, and that makes it 1/4 of the banking system, almost. I mean, we were never previously in our financial history been faced with this much of a growth of the mutual fund sector. And therefore, to you, Mr. Mahalingam, do you think that time has come to look at the mutual fund sector's relation to the banks, the circulation of funds? You tell me, is there time to at least be alert to what is the role that this large amount of money is playing in the financial system, and think of some regulations?
If you look at the regulatory domain of the mutual funds today, India is perhaps having a tighter regulation than the other comparable international jurisdictions as far as the mutual fund industry is concerned. You have a net worth requirement. The net worth requirement is about 50 crores per mutual fund. Now people ask the question, it's a mere pass-through vehicle. Do you need a capital requirement at all? Now to this the answer is, well, pass-through vehicle does not mean that you don't need any capital at all. You could incur some losses by way of something which had to be compensated by the AMCs, number one. Number two, the AMC themselves have to really infuse confidence amongst the investor public. Look, I am worth this much of capital. That is number one. Number two, when you talk about the regulation from the exposures perspective, I think the kind of exposure guidelines that SEBI has now given as far as the mutual funds is concerned, they are pretty conservative. So, I mean, the mutual fund really cannot go completely overboard at all. So, to that extent, I would say that the regulation in the mutual fund industry is pretty good. It's very robust.
We are seeing this increasing space that NBFCs and mutual funds, but more importantly, NBFCs have grabbed from the banking system in general and the public sector banks in particular. First, to the man who is suffering the disadvantage, Mr. Gupta, do you think that banks have got too much of regulatory controls on them, capital as well as disclosures, provisioning? Do you think it's time that the regulatory arbitrage that NBFCs enjoy needs to be questioned?
I think this is what the banks have been saying for a long time, that there should be a level playing field between the banks and all the other organizations who compete in the same area. To some extent, some arbitrage has been reduced. I mean, even the NPA recognition norms used to be 180 days for the NBFCs, which is gradually being reduced to 90 days now actually. But at the same time, the banks do have certain advantages like access to the customer deposits, which the NBFCs or some of these other competitors don't have. But at the same time, the kind of regulation which the banks face, obviously the NBFCs are not subjected to that. So that does create some bit of an arbitrage. In fact, given a choice, I think as a bank we would also like to set up an NBFC which can do some of the businesses which we find it difficult to do within the bank also. I guess a level playing field is very important, so that everybody is on the same field and they are able to compete on the same terms actually.
Mr. Mundra, that also creates a regulatory advantage for NBFCs vis-a-vis banks. Your general thoughts, do you think the ceding of terrain is largely because the public sector banks got into a problem and therefore now, in addition, there was 1 year of really low interest rates that gave them the advantage? Do you think a regulatory balancing is needed at all?
I think let's get few basic facts right. Banks and NBFC both have their roles, they have their own space. And to say that regulation, the arbitrage available should go away does not mean that there can be a uniformity of regulation. There can't be a very, exactly the same regulation for bank and NBFC, but that is precisely why that now almost I think one or 2 years back, what regulator has started doing what they call as the harmonization. It is not equalization, but the harmonization of regulation. Let's also understand one thing, and what is typically called as the grand bargain in the financial system, that while banks say that we are required to keep CRR, SLR, private sector, but they are also required to allow to access the public deposit, they can raise CASA, NBFC can't do that. So that is what is, is a part of grand bargain. We should also understand, considering particularly in India, the fund which our NBFCs are sourcing is largely still from the banking system. And when the NBFC are raising funds from the banking system, banks are providing capital on that. And when NBFC are in turn on lending those funds, they are again providing capital on this. So in an indirect sense, you are also creating a larger capital cushion in this whole process. So I think harmonization is the right way, and that is where the system is moving.
Round of applause to all the panelists for excellently bringing out the plight of the banks and the confidence that they are in a good position to tackle the regulations and go forward. Thank you very much, ladies and gentlemen.